Hey, what's going on, everybody? Welcome to another segment of Crypto World Radio. Good morning, good afternoon, good evening, wherever you are. My name is King Wabi. On behalf of Because Bitcoin, welcome to our Twitter Spaces segment. If you're listening to us from YouTube and you enjoy crypto-specific content from our brand, feel free to subscribe to our YouTube channel where you'll be able to listen to all of our Twitter Spaces that are re-uploaded onto our YouTube channel 5 to 10 minutes after the completion. Today, I am joined by the lead analyst over at Swan Bitcoin. As you guys know, yesterday we had Mr. John Har, who works in the private client services department over at Swan Bitcoin. So it's an honor to have another representative of that company here. Thank you so much for joining us, man. I want to welcome you to the Because Bitcoin community. It's an honor to have you guys on here. I want to thank all you Chads over there. And for those of you listening here on Twitter Spaces, I have the link to our Discord above. We're nearing 1,200 members. So if you want to join a community that's active around the clock from people all over the globe, enthusiasts about the equity markets and the crypto markets, all there. It's a one-stop shop. We've got a great team of guys over there. Myself, we have Max, we have Carter, and also our analyst. William and Tommy, who do Market Check over on our YouTube channel at 11 a.m. Eastern Time. And yeah, I want to welcome you formally here, Mr. Callahan. It's an honor to have you. How are you feeling today, my man?
Hey, what's up? Feeling good, man. Feeling good. It's been another wild day in the markets, and yeah, it's never boring. So happy to be here. Happy to meet you guys for the first time.
Thank you, man. Thank you. And man, I guess we'll get started off with the usual question that I ask my speakers. How did you come across the digital asset space, and what attracted you to it?
Yeah. Well, I guess I got to go back a little bit. Like I grew up really interested. Like my father was a gold bug, and there was a lot of really important books on the bookshelf when I was growing up, and he kind of instilled in me, I guess, a distrust for banks from an early age. And some of the books that I'm talking about are The Fourth Turning and The Sovereign Individual, which were both written in the 90s. And he had me read that when I was like a young teenager. And both those books were pretty impactful on me. And then I really became obsessed with financial history, and I became obsessed with studying central banking as well as the past financial crises that had plagued humanity throughout history. And so I really went deep into that. And when you go down the central banking rabbit hole, especially this was probably 2014, 2015, it was kind of a dark rabbit hole because I felt like they had kind of taken over and usurped power from sovereign governments. And they bought the regulators, they'd bought the politicians, and I didn't really see how they could be stopped. And so I kind of just like gave up. I just kind of stopped reading about them and felt like I kind of understood them, but I didn't really see a solution to the problem. And then around 2015, I saw this movie called Dope, which is an indie film, which is a pretty...
That's exactly... Dude,
yeah.
I'm sorry to interject here, but that is literally the first time that I have ever heard about BTC, right at that movie as well. But
really nice, yeah.
I just come off of high school, man. Yeah, man.
Yeah, dude, it's a good movie.
Throwback, man. Wow.
Yeah, it's a good movie. In the movie, there's like the young kid who's a smart kid,
yep.
And he finds a bag of drugs.
And all that stuff.
He finds a bag of drugs. And this is 2015. And I like...
that was right at the bottom as well, man. That was at like when we were at $160 per token.
Yeah, exactly. That was a bear market. And I had like maybe heard about Bitcoin before, but not really. And when I saw the movie, he sells the drugs like a Silk Road type thing on using Bitcoin, and he raises the money to go to college. So it's kind of like a happy ending and stuff. But I saw the movie and I was like, that's weird. Like I thought Bitcoin kind of died, or like I didn't really know it was like a real thing at the time. Nobody told me about it or anything. But that was my first touch point, but I kind of didn't really explore it that much. I just remember thinking that was interesting. And then it was about a year later when I saw some random ass article, and I clicked on something, and then I started reading about Satoshi Nakamoto, and I just found it like unbelievably captivating that nobody knew who this person was. And he started this thing, and that led me to really jump down the rabbit hole. And then given my previous studies of central banking and financial crises, I pretty much immediately understood the significance of what Bitcoin was and how it could potentially take power away from these central bankers who I thought were kind of destroying society in a way by wrecking the money. And I knew I had to be a part of it. And so I jumped like head down the rabbit hole at that point, and haven't really looked back. And now I'm here talking to you. So that's my story.
Jeez. I mean, my story is not really as exciting as yours. I mean, after I saw Dope, I developed a little bit of crush on Zoe Kravitz, I believe,
Yeah.
is the love interest in that movie. And it's so cool how he ends up leaving with all the BTC. It's like he didn't get the girl in the end, but he secured his freedom at least. Got that scholarship and all that stuff. But yeah, man, soon after that, I completely forgot about the whole thing, and didn't come across crypto until December of 2017, when the YouTube algorithm was sharing. I'm not sure if you remember. It's this Jamaican fellow. He used to be promoted by this Ponzi scheme called BitConnect, and he said, "This is my wallet. This is my Bitcoin wallet. I did not pay for it. I earned it." And I mean, everyone knows what happened a few weeks after we had topped in December of 2017. So I got around near the top of the prior cycle, but I never looked back. The technology aspect to it, and more of like, I looked at it as sort of like the NASDAQ back in the 70s, sort of like this hedge on global liquidity, and sort of this cypherpunk uh, sort of thing. Like, have you seen the movie Blade Runner? Something like that.
Yeah.
And sort of like the next epoch of an industrial revolution. So that's how I started looking at it right when I got in. So man, ever since then, what are some developments that you've seen that have made you proud to be in the industry? I mean, you're a lead analyst. You must see these things well before they happen. Like, before public companies start adding it onto their balance sheet, I'm sure some of these companies reach out to you guys over at Swan.
Yeah, I mean, it's definitely been a wild ride. I think I'm most proud of the fact that, as a Bitcoiner, especially back in the day, like maybe like 2018, and it's just, you get attacked constantly, right? I mean, it's constant FUD, constant bad press. And this industry just doesn't care. Like, it's like Bitcoin doesn't care. We don't care. We're going to keep building. And so even during the price drawdown of 2018, where it was, I think it was like 83, 85% or something like that. I mean, the amount of building that I was witnessing firsthand, it was such a disconnect between the price and what I was seeing on the ground in terms of these developments, whether that's the general market structure in terms of the maturity of custodians and the trading and liquidity, like just different tools, infrastructure, the UX, UI of these apps, like all across the board. And on top of that, the innovation that was occurring on Bitcoin itself, with the rise of the Lightning Network and these things, I was just like, man, the price is a liar. Price is a liar. It's a distraction, volatility. What matters is the fundamentals of the network. And what I'm seeing is a flourishing ecosystem. And I feel the exact same way now. I really do. And it's very similar to 2018 in that way, where you got Bitcoin is dead, like Bitcoin's never going to recover and all this shit. But on the ground, I'm just seeing innovation, and I'm seeing, and I look at any of the kind of fundamentals of the network, whether that's addresses holding greater than $100, whether that's number of nodes, whether that's hash rate hitting all-time highs, whether that's the amount of self-custody that's going on. It doesn't really matter what you look at. It's all up and to the right. And so this is another opportunity, and it reminds me of that time, because back then, it was like a period of accumulation in hindsight, right? That was a good entry point for long-term holders with very long-term time horizons. And I think maybe we'll look back similarly now. I'm not saying like in the next 6 months or 12 months, we won't see more downward price action. But I think, when you're seeing price down at these levels and all of these signs of a bear market bottom in terms of minor capitulation, Bitcoin is dead headlines. Speculators are mostly gone at this point. You're seeing Ponzi schemes get wiped out. All the bad actors are getting exposed. Like those are the kind of things you want to see in a bear market to build a healthy base to build off of into the next bull market. So it's just been it's been a thrill to be kind of in a front row seat to watch this industry grow, and it's still growing and it's still early. So it's really exciting.
So you approach the crypto market sort of. It's this quote from Graham and Dodd where it says, they're talking about value investing, and they say, and I quote, "Value investing is deriving the intrinsic value of a common stock independent of its market price, and by using a company's factors such as its assets, earnings, and dividend payouts." So sorry, hold on. I'm outside here, and there's a truck being backed up. Oh Lord, give me
You're good. You're good.
Give me a minute. Give me a minute. Sorry, brothers. Usually I go on my walk anytime I do these spaces, at least for the first half. But yeah, anyways. Excuse me for that, guys. Anyways, it's basically value investing is deriving the intrinsic value of a common stock independent of its market price. By using a company's factors such as its assets, earnings, and dividend payouts, the intrinsic value of a stock can be found and compared to its market value. Now, I know that with Bitcoin, it doesn't necessarily have things like dividend payouts or things like earnings. But as far as intrinsic value is concerned, there's something to be said about the scarcity and, of course, what Michael Saylor says as it being backed by energy, which is the world's most valuable resource. And I would consider something like the halving as a dividend payout, right? Your risk to reward, at least from monetary value, does favor the upside. And just a little bit of context here, I do enjoy playing the swings here for monetary gain, to increasing my cash stack. So I'm sure a lot of people within the industry do like to trade this as a commodity and things of that sort. But how do you view it? Because I know we're talking about value investing here. So how do you approach BTC? Given that you're a lead analyst, do you look at things pertaining to the macroeconomic market, things going on in the broader economy?
Yeah. I mean, you have to. I mean, Bitcoin's such a tiny asset. And we are still in the era of central banking. So I follow macro very closely because Bitcoin's just this one little asset getting thrown around as these central planners, bring in a bunch of liquidity, then suck it out. Bitcoin's not going to be immune to those kind of things. So you have to kind of consider that in your valuation models, just kind of where we are in the business cycle and the long-term debt cycle as well. In terms of like Saylor, I actually disagree with him on that point. Like, I don't think Bitcoin's backed by energy. I don't think Bitcoin's backed by anything. I think the idea that money has to be backed by something is actually very fiat. Because like, if you think about gold coins and silver coins before there was paper money, they didn't have to be backed by anything. And the reason why is because they stood on their own monetary properties. And I think Bitcoin stands on its own monetary properties as well. You mentioned scarcity and the other ones that, I don't know if we have to go through them, but, Bitcoin is just money. And so it stands on its own. It doesn't need to be backed by energy. The energy component is more, I think maybe when Saylor says that, he's talking more about like Bitcoin security, which is fine, which is, I think, true. But it's the value itself, I don't think it's backed by its energy. I don't think I agree with that. And then in terms of other valuation models, I always like Metcalfe's law. This idea of how new technologies come to market and when you have a network effect and how it grows in an S-curve fashion exponentially. As more users come to the network, it becomes more valuable itself. And I think Bitcoin will follow that same kind of valuation model, like similar to what Facebook did, if you will. And so for that, like I really keep track of the demand side of the equation. And that's the beauty of Bitcoin, is because I don't really have to worry about the supply side of the equation. I mean, that's fixed. And like anything else, I have to think about the supply and the demand. But this is like, I already know the supply. And if you understand the technology, you know that the supply is not going to change. The issuance schedule is not going to change. And so really all I care about is the demand. And so when you really break Bitcoin down, it's just a very simple supply and demand curve. And if you think demand's going up, then there's really only one way the price can go over a long period of time. And I try not to get so data heavy and just think about more anecdotally. Like, do you think Bitcoin's become more popular in the mainstream media, on TV, in conversation over the last several years? And the answer is like unequivocally yes. I mean, back in 2018, when it showed up on TV, I'd be like, oh my God, there's a Bitcoin thing. Now they talk about it.
Mr. Robot.
Now,
you're talking about Mr. Robot in suits, huh?
Yeah, that's a good point too. And like now it's getting talked about on the Congress floor. And that's just a sign of demand. And as you look at Bitcoin more as a function of where it is and it's more in its environment, it's just a reaction of the environment. And the environment is currency debasement. The environment is multi-decade high inflation. The environment's censorship. And those are all things where you need a digital sound money that's censorship resistant, right? And so I think the demand for that is going to keep going up. And if we already know the supply is fixed, then it's pretty simple, right? And so that's why I'm bullish, because this is Bitcoin's an actual solution to a really, really big, important problem that I think that problem's only going to get bigger as these central banks get more desperate and they turn to currency debasement to try to get out of this debt problem. And so that's kind of how I look at things more at a basic level.
So outside of that, what you do at Swan, do you look at things like incoming inflows and outflows? A good data point, just to give you some context, a good data point that I had found over the coming days is that for the first time since the peak of the market back last December and November, there have actually been inflows for Bitcoin that have turned positive for the first time in over a year. So do you guys look at any on-chain analytics when it pertains to that? Or do you guys just more do more of like a macroeconomic scale and you decide how to move as a business?
Yeah, I mean, on-chain metrics is one of those things where as an analyst, I've always taken it with a grain of salt. And I think people really need to think about the assumptions being made with the data before they jump to conclusions about what they're actually seeing. And so, like, for instance, a lot of times where you see, I'm trying to think of an example here. If you see, let's try what's a popular one. There's a popular one that's
unusual whales. Those people, they usually
no. I'm talking about more of like a specific on-chain metric. Like one of them is like long-term and short-term holders. Oh, and the way the way it's calculated is like 155 days of a UTXO that hasn't been spent. But I could have all my Bitcoin in this address, right? And I've been holding it for 5 years. I've never sold it for USD. And then I just wanted to change up my security setup and I just moved it. But that metric would put me as a short-term holder just because I moved the Bitcoin, even though I never sold it for USD. And people will say like, oh, people aren't selling because there's more long-term holders doing this. And that's wrong. Like that just means that the Bitcoin changed addresses, but you can't make these assumptions with this data because there's a lot of assumptions made with them. So I think you need to take on-chain metrics in general with a huge grain of salt. You need to take it more from like a very broad perspective, very big picture perspective. And I like to look at like mining on-chain metrics specifically because I at least can look at the provenance of where the UTXO is coming from, because I know it's coming from the block reward, right? I know that you can track it, at least it's going there. And then I could know, all right, so I know the miner just has that Bitcoin, and we can kind of see where it goes from there. But after you go like one hop, like it just gets a little bit muddled. And so I think the idea of on-chain metrics for like predictive value for price is nonsense. But I think it can be good for just looking at the overall health of the network and make really, really broad conclusions, and then kind of pair that up with other pieces of data to build a picture about maybe what's going on in the broader system. But I think over time it might improve. I think we're just really early in not only Bitcoin, but the idea of on-chain metrics. But I think the data analysis and the validity of the data will maybe get better over time as we learn more about it.
So I wanted to bring up a few points from what you had mentioned. You had mentioned shows, and then it being on the television, and this, that, and the other. So, all right, we have a few data points to look at. In the bear market of 2015, 2016, you started having cryptocurrencies featured in the USA Network with shows like The Suits, Mr. Robot. There was also the show called Startup. And then the preceding bear market, you started seeing more advertising for exchanges, right? And more of that traditional finance money coming into the system. You had Peter Lynch talking about it. You had what was it called? eToro running an entire YouTube campaign where it's this guy, right, in an elevator, and there's a bunch of people saying, look at the price, we're all gonna burn, we're all gonna lose our money, and the guy just says hodl, 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 right? And now during this bear market, I'm not really seeing anything other than, things like Anchorage and Fidelity making those moves to onboard those next 100 million users. So despite what's happened in 2022 with a lot of these, I like to call them fintech companies, FTX, Celsius, BlockFi, they're not really crypto, right? They're essentially just a startup company that had all of their financial books completely off the rails. I mean, there's no excuse why you would manage over $10 billion on QuickBooks, right? That's just not lining up. So, of course, I do see some regulatory oversight, but outside of that, how do we onboard the next 100 million users? Because from what we see now, even though we've had all these events happen, right, there's something to be said about the social capital that still remains in the system. I would consider it being a magnitude of 10x, 1,000% relative to the prior bear market. So, in your eyes, you guys at Swan, and more specifically yourself, how do we onboard the next 100 million users onto the digital asset space? How do we get there?
There's a lot there. I think short answer is education. It's almost like it's just information asymmetry right now, just understanding what Bitcoin is, and through education and why it's important. I think that's kind of the big thing in terms of how we bring in more people. I think those BlockFi, Celsius, and FTX, I mean, they were centralized exchanges peddling in cryptocurrencies. And the current iteration of the broader cryptocurrency industry, I think, is riddled with bad actors and false promises. And I think they can be a distraction to Bitcoin personally. And I think actually this year we've seen, this is actually a big difference between 2022 and 2018 bear markets, was we actually have seen institutional interest stay strong despite the bear market. Back in 2018, Goldman Sachs actually closed down their Bitcoin trading desk because they just threw in the towel because Bitcoin was down so bad. And this bear market is different. You had BlackRock come in and partner with Coinbase to offer its institutional clients direct access to Bitcoin. They also announced the launch of like a spot Bitcoin private trust available to institutional clients. BlackRock is the largest asset manager in the world, $10 trillion under management. BNY Mellon's the world's oldest and largest custodian bank. They have $43 trillion under custody, and they announced the launch of their own custody solution for institutional investors. That's a big deal. That's a really, really big deal to have Boney come in during a bear market. And they said the reason they did it was overwhelming demand from clients for an institutional grade Bitcoin custody solution. You had Goldman Sachs just do their first Bitcoin-backed loan, a lending facility, lend cash to a client collateralized by Bitcoin. First of its kind transaction from a major bank in the bottom of a bear market. And then you had Fidelity, of course, offer Bitcoin in 401k plans. That's where a lot of people's wealth sit, right? And now they have access to Bitcoin. When the price gets back up, it's just kind of human nature. That's when people FOMO. You just need to have these things available and ready to go. And that's what we're seeing in the Bitcoin bear market. And they also allowed just their regular retail clients to start purchasing Bitcoin too, in terms of Fidelity. So I do think institutions like that are a big part of what's going to bring in the next, what'd you say? I don't know, 100 million. And I think there's still a lot of regulations that are going to get passed in the backlash of all this stuff. There's going to be enforcement actions. There's going to be more regulatory clarity, because a lot of these institutions and companies have been sitting on the sidelines wondering, what the hell are these things? I can't, I have a duty to my shareholders. I can't take the regulatory risk, even if I want to, even if I love to. They just will not give regulatory clarity to me right now. And the regulators got to figure this stuff out, because they're starting to get heat, right? Like, people are starting to get really hurt by not having a regulatory framework. And I'm not, pro regulation or anything. I'm a free markets guy, but you have to have a fair playing ground. Like, you can't, on one hand, allow for these digital assets to go and rip people off, and then say it's bad for grandma to get called up and sold penny stocks. Like, you need consistency across the board. And so there's a reason securities laws exist. It's to protect investors from scammers. And so I think you're going to get regulatory clarity, and that'll bring in a lot of people. And another example of that was the FASB news, which is an accounting rule change, which doesn't sound exciting, but it actually is really a hindrance to these companies who are trying to put Bitcoin on their balance sheet. The way it's set up right now, there's a huge impairment. The way the accounting rules are, like, if you put Bitcoin on your balance sheet and it drops in price substantially, you have to mark that down. But if that Bitcoin ever goes up like 20, 30%, you can't say that Bitcoin went up. You have to basically, so you have Bitcoin, it's at 16K. Even if Bitcoin's at 40K, as an the accounting rule, you have to just say it's still at 16. So it makes no freaking sense. And that's going to get changed. Probably early this year, they're going to vote that through, where it'll be fair accounting rules for digital assets for companies. So it's boring developments like all of these things that really help bring in that next wave of people. And then the other thing is just the old traditional monetary system is falling apart all over the world. I mean, just not even outside, not the dollar. I'm talking about like low currencies, like coming from the bottom up. I mean, these things are failing and they're inflating at a rapid pace. And people are going to need help, and people are going to need solutions. And, I think Bitcoin's the only solution for a lot of these people in terms of an accessible, decentralized store of value where they can protect their wealth from debasement and seizure and censorship. And I think as the world continues to spiral out of control, demand for Bitcoin will continue to increase. And so it works two ways. And so all of those reasons are why and how we get to the next 100 million Bitcoin users, or 10 million. I forgot what you said, but yeah.
Yeah, with regulation, I'm not exactly pro-regulation. I think there should be light touches, because I'm of the belief that the state should not touch your money regardless. And a good statistic of what had occurred last year is that even though there are some of these exploits on things like DeFi, the biggest extraction of value actually came from these fintech companies that had absolutely nothing to do with these protocols. Voyager, Celsius, BlockFi, FTX. this was just the result of something like the '08 financial crisis, but in the digital asset space. So that's something that I've really been digging into, because if I launch a smart contract just for fun, right, and I do an NFT collection just for fun, it's a lot different than, say, I launch an exchange, and when a user deposits their funds, I buy the asset of my choice, right? Similar to what FTX did. So it's kind of ironic because when you look at things like the Bitcoin Talk Forum, right, and you look at some of these older posts from individuals, I'm sure he doesn't have the best reputation now, but guys like Roger Ver that really pushed for the use of Bitcoin in everyday activities. I believe he was the first merchant to facilitate Bitcoin in an actual self-sustaining revenue business that he worked in back in the day. And the model back then, as far as cryptocurrency specific stuff, was exactly that the state should not touch our money. So what I'm looking at as far as Bitcoin specificity is, what are the developments going on right now that are helping grow the network, not only from a social standpoint, but also from a mechanical standpoint. So that would be my follow-up question to you. What are some of the developments that are going on within the Bitcoin ecosystem that you can share with us that you're personally excited for?
Yeah. I mean, I have to address this, but there's a little bit of a difference between having a centralized token that you create out of thin air, and then the goal of that token is to get listed on an exchange to dump on retail, which is the insider exchange dump that's been going on since 2013. Then it was the ICOs, then it was DeFi. There's a few legit projects for sure. I mean, and they're doing exciting things. But 99% of them are exactly that. And that's wrong. That's an unregistered security, pump and dump schemes. And it's not crazy to say this. I've looked into the data. I've run all the numbers. And so that's what I'll say about that. I mean, it's not just the centralized exchanges. It's very bigger problem than that. Like if you look at FTX, it was enabled by their ability to print FTT, inflate their balance sheet, use their balance sheet that's inflated with FTT because they control the supply and the liquidity. They were able to raise money at obscene valuations and then invest in countless venture capital deals and basically own half the freaking industry because of their ability to print FTT. So you got to go back to the source of the problem with these things. And so that's what I'll say about that. In terms of the Bitcoin ecosystem and the innovation that's going on there, I mean, there's a lot of exciting things. And, Bitcoin's one of those things too. It's like, I don't want it to move fast. Like I really, really don't. I want it to move very slow and deliberate. And it's like our only chance at this. So I'm not for implementing things fast or anything, but this year was pretty exciting, actually. I saw what's really important to me is to fix or improve self-custody. I think self-custody needs to improve and to allow people to feel more comfortable taking self-custody, taking self-ownership of their Bitcoin. We're just in the early phase, and UX and UI is still pretty challenging. I mean, just try to walk your parent through it or something like that. I mean, it's not straightforward for the regular person not familiar with Bitcoin. And so I saw solutions, new wallet solutions come out that were a little easier, like Nunchuck, which is really interesting. It's like a Bitcoin wallet that offers end-to-end encryption and multi-user, multi-sig capabilities where you can do a lot of interesting things like time locks and inheritance planning, which are really problems. And they do it in a way that maintains Bitcoin's decentralization and its security at the base layer. So it's just a wallet, but it's really, really cool. And it kind of pushes things forward. And I think it's going to be a big deal. The other thing was Fediments, which uses a really old technology like Chaumian eCash mints to cryptographically maintain privacy between individuals of a group who are doing community custody. The idea being you trust the ones you love the most, even more than like technology, like your mother or, someone you really care about. So you can build these communities. And so you have this like spectrum of custody, where you have at one end, you have like trusting the exchange and having it on a third party, which is like the lowest privacy and no control, highest risk. And then in the middle, you have like community custody solutions like Fediments, where you have, a trade-off between higher privacy and control, and then like more convenience and more functionality like inheritance. And at the other end, you have like really cold storage self-custody of multi-sig, and you can all do kind of schemes like separate geographically, like, the cypherpunk way. That's how I would describe it. And so you're starting to see this like evolution in the custody space, as well as great companies in that space starting, building during the bear market, not blowing up like these exchanges and stuff. So that's just one example. There's others that we can get into, but I get really excited about custody stuff.
Yeah, with exchanges, it so happens that it happens every cycle. So I'm wondering how the space is going to look in 5 to 10 years, because I personally don't see cryptocurrency going anywhere really. I think it's here to stay. I know Bitcoin and crypto. I know people differentiate them into different asset classes, but me personally, I don't see it going anywhere anytime soon. There's just too many eyes on the space as a whole. So, with that being said, how do you see the rest of the year playing out, given that you had mentioned that you pay attention to macroeconomics? So how do you see the year playing out as far as it goes pertaining to the macro side of things?
Yeah, I mean, 2022 was a pretty brutal year, like the worst for stocks and bonds, talking since like the Civil War. So we're coming out of that. And, we're starting to see some like CPIs start to weaken really for the past like 6 months. And we saw it do that again. And the Fed's definitely going to like that. I don't think they're close at all to pivoting, like not even close, like this idea of pausing rates, or at least cutting them, I guess is what I would say. Like if they keep it high at these levels, eventually something will break. I mean, you can't keep going with the amount of leverage in the system. I'm looking at the corporate credit markets and looking at these companies that basically have so much debt that they're zombie companies. And that means they don't even make enough money to pay the interest on their debt. And they're about like 25% of the US economy right now. And they're going to have to roll over their debt when their interest rate has doubled from like 4 to 8. And $1 trillion of that is maturing in 2023. And another trillion over the next 2 years after that. So like I look at things like that and I just see like more weakness in general. And it just takes time for interest rate hikes to trickle through the economy, and it usually shows up at different rates at different places. And everyone's focused on the strong, quote unquote, strong labor market, but that's usually the most lagging part of the hiking cycle. And so it really starts with interest rate sensitive industries like housing and autos, which we've seen really come down of late. Really since the summertime, housing has had their second worst contraction in the post-World War II era. It's 2.1%. And housing's like important because a lot of people have their wealth tied up there. And if that gets hit, there's like the reverse wealth effect of people not feeling as wealthy anymore. They're checking Zillow. They're not going to buy as much. They're going to start tightening their belt, which is bad for consumption in the economy, spending in the economy specifically. So housing's important too, because you've seen most people buy in a fixed interest rate. And even if the interest rate hikes has moved as fast as they have, a lot of people's fixed in interest rates at like really low rates, these mortgages, and they're not going to move as much. And that's I've been thinking about that, like in terms of just mobility in the economy, and what that means is like less fuel consumption. What that means is less people kind of taking trips, moving around. They're not going to move, and so you're not going to buy like refrigerators and furniture and appliances, washing machines, dryers, these durable goods, which have fallen off a cliff in November. And so you're going to see that trickle into new orders and then trickle into earnings finally. Like companies are going to start to feel it. And once companies start to feel it in their profits and their earnings, that's when they start laying off people. So it's the last thing to fall. And so I think we're just really early in this hiking cycle, and we'll probably see things get worse before they get better. But then I think the central bankers are spineless. I think they're jawboning, and eventually they'll have to pivot. But, I don't know when that is. It could be a year from now. It could be a year and a half from now. Like, it takes time for these things to draw out. And when people say like recession, like bad things happen in recessions. Like people say that like loosely nowadays, but like we should hope one doesn't happen. But if it does, like people lose jobs and and there's actual like consequences. So I think we need to be prepared for that. But then I think once people lose jobs and they start to protest and they want more stimmy checks, I think the politicians and central bankers will give in and basically go back to what they've been doing for the last, at least decade, but more. So that's kind of how I see things. It's like, it's going to get a little bit worse, I think, and then it's going to get better once they flood the thing with liquidity again. Pretty straightforward. The last part, at least.
Thank you, Sam. Thank you. I just realized that we're well above our halfway point. And guys, if you want to come up and give some statements and ask some questions to Sam, feel free to click that request button and I'll bring you back up. We're here with Sam Callahan from Swan Bitcoin. He's the lead analyst over there. And we have Bit Dads up here. What's going on, bro? Feel free to share your thoughts and ask your question, brother. Good to have you here.
Definitely. Thanks for the invite, guys. Great evening, Sam. Good thoughts. Never really once had one thing to add. I'm a tradesman, and so I will say this. So I'm a tradesman, been in it for about 12 years. So what we just talked on here with, ending up here with this recession talk, looking at the next year, I have some decent indicators in my own life that have played out in the past as far as what commercial real estate's up to, because commercial tends to be a leading indicator within the real estate, even housing. So right now, we're still building zombie buildings. I mean, right now, not only in my area, but I'm a union member, and throughout the country, there's still so much, I guess, fake money in the system that's still just trickling down. So, like Sam said, it's going to take a long time for these rates to really get felt, and they're going to get felt in these contractors' pocketbooks. They're going to be felt because we're already bidding out 6 months. So we do see a slowdown in work in general coming. So, I mean, that's still a year's, it could be a year off, and that's just in commercial space. So good talk. I mean, good points. I'm glad to be here. I don't really have so much a question. I just, I think that there's a lot of things that could be said when it comes to self-custody, when it comes to wisdom within the space. I encourage all of us to just move forward with a mind that's not only open and willing to learn new things, but also cautious at the same time. So thank you.
Hey, thank you. That was great. I have a question for you, if you don't mind.
For sure.
So if you work in real estate, would you look at like new construction as maybe a good metric to look at or indicator?
That's fun. I must have misspoken. I don't work in real estate. I actually work in construction. I'm a tradesman.
Oh, gotcha.
I'm a tradesman of 12 years, but I'm in commercial construction.
Well, even better. Yeah. Even better.
Yeah. So there's so much funny money still tied up in this, and in our economy. And what I was saying is, as far as bidding 6 months to a year down, we are totally we're seeing a slowdown. Big thing is these office buildings. What are they? They're vacant. You know what I mean? Everybody went home. So, but that hasn't slowed us down, and that's the ridiculous part. Is for 2 years we've been hammering out office buildings that no one's coming to. They call us back 6 months later for a punch list. A squeaky door is just vacant. It blows my mind.
That's
And so
wild.
it is wild. It is wild. So there's a lot of funny money, and that's what I call it. There's a lot of pocketbooks that have been subsidized, whether it's by government or incentivized through advertisements. They have money to be spending, and it's still frivolously being spent. So I think it's going to take some time for those things to be felt. It's going to be felt in construction. And as Sam pointed out, the rates are hiking now. Everybody's gridlocked, in my opinion. No one wants to move. No one wants to refinance. Everything's kind of gridlocked. And so, when we stop buying those appliances, when we stop doing those things, that's when, layoff starts beginning. And like you said, I agree with all, what you're saying.
Hey guys, just want to remind you, if you enjoy spaces like these, feel free to follow us here on Twitter at BecauseBitcoin and turn on those bell notifications so that you can be made aware of when these spaces go on. We also have Market Talk Monday through Friday at 4:15 p.m. Eastern, and then myself, King Wabi, at 7:15, presenting Crypto World Radio. So Sam, I think we should start wrapping up here. We're about to get into that hour, and I want to be respectful of your time, sir. So, what is it that keeps you interested within this industry, despite all the things that have occurred in prior bear markets, and even from a social sentiment? You turn on CNBC, and it's like every other day they claim that Bitcoin is dead, and this, that, and the other. And of course, if you're more of a swing trader like myself, you see Jim Cramer saying, you should sell everything, and then we pump 20%, and it's like, oh, I can see us hitting 30,000, 40,000 per unit from what charts suggest, and it's sort of ludicrous. But yeah, what keeps you entertained, man? What's kept you entertained since you've got in a few years ago?
Yeah, man, great question. I guess I'm just like a long-term investor. Like I just pretty much buy and hold it. I think what keeps me is that I really think it solves a really important problem, which is people's inability to save and like the broken price of money and what that does and the distortions in the economy, as well as the reverberations into society in general, and wealth inequality and division, and how that unfolds. I think Bitcoin could allow people to save around the world, especially people less fortunate than I am, in countries with double-digit inflation. That's like 2.2 billion people who don't have a solution, and they're going to have a really hard time if we don't build the right tools for them right now, in the future. So Bitcoin has unique properties. It's a decentralization and censorship resistant, and it's permissionlessness. And it's anybody with a phone, and that's really powerful, and have access to a savings technology like that during a period where I think we're going to see widespread debasement. And with debasement comes increased censorship, always, and capital controls, because these central banks and governments need to keep you in the local currency for them to maintain control. Because if they're just pulling on levers and nobody's using the currency, it doesn't matter. And so you often see increased capital controls, withdrawal limits, and censorship, and those kinds of things. So I think people are going to really need Bitcoin. And I think last year we really saw that with people using Bitcoin on both sides of the Russia and Ukraine war. There was the innocent civilians trying to get money in and out of those countries. We saw it increase rates of Bitcoin adoption in jurisdictions with high rates of debasement, and throughout like Africa, and Bitcoin being used to fund like the protesters who got their bank accounts frozen and things like that. So that's what keeps me going, man. Is like Bitcoin is more of like a tool for individual empowerment and freedom, And I think that's what people should focus on, to be honest with you.
Thank you, Sam. Thank you. And what are your thoughts? You had mentioned protests. You had mentioned the protests and all that stuff. There's a development going on that's a bit controversial in the Bitcoin community. Lightning Labs proposed Taro, where essentially you'll be able to build out things like stable coins and non-fungible assets. So do you see a future where something like that gets passed on the Bitcoin network and things like stablecoins are built upon the Bitcoin base layer? It's sort of like this omni-chain smart contract hybrid. What are your thoughts on things like that and potentially being rolled out into you know I don't want to be rude here, but impoverished nations. I think things like stablecoins eventually do have to be regulated, and a development like that on Bitcoin is something that really excites me, and I wanted to get your thoughts on it before we start wrapping up here, brother.
Yeah, man. I think Taro is cool. Personally, Omni. There was like the Omni layer, I think, on Bitcoin before. Like the first stable coin was on Bitcoin.
Yeah. That was Tether. Tether got created on there, which is just a bit of a fun fact.
It
People
is a
don't
little
really like
fun
to
fact.
mention that. People
well, you
hate
gotta
mentioning
understand.
that.
I mean, it's not. I don't even know. I don't even care that much. Like, it might be a good like bridge solution, which is cool. Like I think about like the transition to a Bitcoin standard from the fiat standard, and if we can make it like more smooth transition instead of like a really crashing, like that'd be good. So like as fiat continues to lose value over time, maybe people will get used to using Bitcoin, and then eventually they'll just continuously choose the better money as they realize that they're losing purchasing power slowly over time. And Taro is cool because it's enabled by the last Bitcoin upgrade, Taproot, and it theoretically you could issue any kind of asset on the Bitcoin blockchain while still using the immutable nature of the settlement layer and the security of that, the consensus mechanism. So that's cool because it's where the information is actually transferred and stored inside of the Bitcoin transactions themselves, which is different than previous attempts. And that's enabled by the Taproot upgrade and Lightning and the growth of the Lightning network. So these things, I've always just thought they would build in like layers slowly over time. Like we had to like establish the settlement layer because that's like the security. It's like the most important. And then we moved on to like scaling payments with the Lightning network protocol. And now on top of that protocol, you're seeing more innovation like Taro, another protocol on top of that. And then more like application layer stuff. Like Impervious is a cool one with like decentralized web browser. I'm trying to think of, I can't really think of another one right now, but like those are the kinds of things that like just get me excited. There's a ton of startups working on Lightning. Like the whole ecosystem is really kind of spread out the last year as well, which got me excited. Like there's a ton of different startups building on Bitcoin or Lightning. So it's exciting, man. I like how it's going slow and it's growing. So it's pretty cool. And Taro's just a part of that.
Hey, brother. Got one more question from the audience from BTC Confidant. He's asking, what is your take on the situation going on with Grayscale, things regarding Barry Silbert and Genesis? How could you see that unfolding? And then after that, unfortunately, guys, we do have to wrap up. Hey, Sam, can you hear me?
Oh, my bad. I forgot to unmute. That was my bad.
Okay,
no, it's a good question. Yeah, it's a good question. I said I was still trying to digest like what just happened with the SEC suing Gemini and Genesis for unregistered securities. So that just happened recently. And it kind of changes the game a little bit. But, I just think DCG, like if you are a grayscale holder, GBTC shareholder, I think there are avenues to, liquidating the trust or selling the Bitcoin in the trust or something like that is very, very unlikely, in my opinion, for several different reasons. One being that in the event of a DCG bankruptcy, shareholders have rights where if they have a greater than 50% vote, they can say, hey, we don't want this trust liquidated. We're going to move it to a new sponsor instead. And there's a lot of different sponsors that would take this cash cow. The GPTC is a cash cow, brings in like $200 or $300 million of revenues from the fees. And even at these price levels. So, I don't think anything like terrible can happen with GBTC shareholders. The worst case is if the discount just continued to widen, if they had to sell their GBTC shares or something like that. But there's a redeem GBTC campaign going on right now, which is basically like shareholder activism, and it's about 30% of the total shares holders have come together with a collective voice, and things like that can really push for change of the sponsor if they get regulators involved and lawyers to push for their cause. So that's kind of going on right now. I think that's why you're seeing the discount close, because it's becoming like, oh, maybe they'll actually, maybe this thing is a higher probability that it moves to a new sponsor through all these different avenues, which would be interesting for GBC shareholders, because there might be some favorable actions like reducing the fee with a new sponsor because it's really high, or allowing for something called Reg M relief, which would remove the discount immediately. So you'd be like a plus 40% instantly on a day if they did that. So I just think there's solutions. I think it's going to be really rocky and stuff like that. But in terms of like the direct trust and the Bitcoin underlying the trust, as long as it's there and there's no like fraud or straight up criminal activity, the Bitcoin I'm talking about, I don't think there's a really big risk of it hitting the market or anything like that.
Yeah, man, I think this is going to turn out the same exact way that Block One handled it. The guys from EOS, they just paid their fine to the SEC, similar to many other institutions back in 2018, early 2019, and things will move on. I'm not an encourager of throwing gasoline when there's a fire. So I do hope for the best when it pertains, to Barry Silbert, and even with Gemini as well. I mean, you're talking about guys that have been in the industry for close to 10 years now, and the only entity that I can think of that has been in the industry for that long are the guys from Pantera Capital. But with that being said, Mr. Callahan, I want to thank you on behalf of Because Bitcoin for taking the time out of your day to talk shop with us, to introduce yourself to the community. It was a pleasure having you, sir. God bless you. Thank you for talking shop with me. I look forward to connecting with you guys in the future. If you want to catch a replay of the space, guys, feel free to check our YouTube channel. Same name, Because Bitcoin. 5 to 10 minutes after the space, you'll be able to catch a replay right over there. And same thing with our other spaces, Market Talk, and even our live streams. You can catch those archives as well. And before we go, if you're a new listener here, feel free to follow us here on Twitter and turn on bell notifications. It was great connecting with you all. Thank you so much for participating for another segment of Crypto World Radio. I'll see you tomorrow at 7 p.m. Eastern Time. And again, Mr. Callahan, I want to thank you. I want to thank you so much. Thank you, sir. Any final thoughts? Any departing words?
No, man. Thanks for having me. Appreciate it. And I hope everyone has a wonderful night.
Thank you, brother. You too, man. And with that being said, guys, thank you all so much. Have a great day, and God bless you.
trading current is just math. It's just math. It has a 95.45% hit rate when we deviate outside of CP2 and CN2. All you had to do is recognize that 95% of the time when we get over here, under this blue line, we get some sort of mean reversion. So let's just assume you long right here. 95 out of 100 times, when I buy this, I'm going to get some sort of bounce. It's just math. Look what would have happened as we move up. Look at the bounce that came after. And now look where we are. If you had just blindly followed the current, you take all emotions out of it, and you say, I'm going to trust the statisticians, you would have bought Dow Jones somewhere down here under 30,000, depending on how you want to measure it from absolute top to bottom, 20% move. We also have multi-time frame alerts. You don't even have to be at your computer on TradingView. You can ping your phone. Now, the current has some really awesome features, and I would urge you guys to join our Discord to get access to it. We give it away for free as a tool to the community. It's just math. There's really no need to overcomplicate things, not even in the slightest.